Hello again, everyone, and welcome to the Options Mentor. Well, another tumultuous week we had in the market this week. We had the CPI, PPI acting on the market, and then the looming possible government shutdown, which was averted on Friday. And then, of course, whenever it looked like it was going to be averted, the market rallied really hard. And now, as we come into the new week, we'll have to see how much carry through there is on that. And we'll also have a Fed rate decision on Wednesday. Now, I don't think anyone expects them to change rates, but they will be looking to see if June is a high possibility. The last I was reading, the market seems to think that June may be the month they could get rate cuts. They'll certainly be looking at whatever they say in their statement this Wednesday afternoon. And of course, the press conference with Chairman Powell that immediately follows to get what they feel is the direction of the Fed, and I'm sure that'll inform the market to whatever movements it makes. So let's just take a quick look here at the chart for SPX. You can see quite a dive we had in the week, and then there at the last moment, we had a heck of a rally going up. Now, with that dive, of course, we had the VIX up, I think it was around 27 or 8. And now it's all the way down to 21 and change after this rally. So the VIX is still, if we go over and just look at the VIX, it's still relatively high. But if you look at it here compared to most of the time, it's lower than this, even though we have gone down. So we have to keep that in the back of our mind that the VIX still isn't really out of the woods as far as it's still elevated. Volatility and fear are still up in the market. I didn't want to touch on one thing. As you guys know, I have a trade alert service. And since last June, we've done 40 trades, 34 winners, only 6 losers. And you know how tough this market's been. But this one we're in now is quite remarkable. We got in a trade, and this is abnormally long we've been in it, but considering what we've had to deal with, I'm pretty proud of this one, in that we got in it on March the 5th. We have endured an over 300-point down move, and this trade is flat to slightly profitable, looking good. Excellent chance for getting it off this week at our profit goal. And it's really been down very little the entire time. With proper trade management, you can do that. And that really demonstrates it. It's very hard to imagine a non-directional trade like butterflies, calendars, even iron condors that can survive a 300-point move and still be looking really good. Yeah, try that one with an iron condor and see how that works out. Not going to happen. So pretty proud of that. I wanted to point it out to you. There is a link in the description if you want to join us over there with my trade alert service. It's a great way to learn trading. You just follow along with me. I put out the trades before I put them on, so you have a chance to get them on. And then every time I do something, I'll let you know before I do it, profit, or if I make some kind of a adjustment or repair, I'll let you know before I even do it. And how I'm doing it, I send out the exact orders that I'm doing. So it's all there for you to follow along and learn. And it's a terrific tool for that. I've had a lot of people who have really developed just off of following along with that. And it's a very, very reasonable price. Check it out in the description. I think you'd enjoy it if that's something for you. So let's go back over here and we'll talk about the week ahead. So the week ahead, of course, we still have, as I said, relatively high volatility. And what you do a lot of times, you can look at the last 3 to 6 months and see if you're in the lower or upper third of the range. Certainly we're in the upper third. And so we still want to be mindful of that, but it has come down a little bit. So I think something that looks attractive this week, as you guys know, I've been doing a lot of combo trades, double butterflies, fly diagonals, fly calendars, different kinds of combination trades in order to get us more width. So we have even a chance of making it through these giant moves. So for instance, over 100-point up move out of nowhere Friday afternoon, didn't have to do anything to trade. It was fine. That's how much width we've got. So that's the kind of trade that you want to have on. And in this environment with the VIX a little lower here and the market isn't really out of the woods. I don't think you have to be mindful of the downside. So I'm thinking a put diagonal with a fly on top combo trade would be good this week. So I'm going to set one up here. And by the way, my new course on combo trades is out, covers all those topics. Link for that's also in the description if you'd like to take a look at that course. All right, so if we were here, I'm using the closing numbers on Friday at 56.38. We've been able to get a lot wider with these. We can probably get all the way up to say easily 5,700. In fact, we'd probably get a little wider, but we'll go to 5,700. And that's where we'll center our call butterfly. And with the VIX above 20, what I like to do is make an asymmetrical fly by going up 80 from the center. So if the center is 5,700, that's 5,780, and down 90 from the center, which of course would be 5,610. And this is an asymmetrical fly that you could set up here. This is just half of your trade. Now to that, we want to add, as I said, a put diagonal. So for that, you'd want to go to the same expiration as the fly's in. That's where your short's going to be for your diagonal. So if we're at 56.38, I wouldn't doubt it a bit if we could get all the way down to, say, 56.70, probably even lower, where we would end up buying our diagonal on the put side. So, whoops, let's see, let's analyze trade. I hit the wrong button there, but that's all right. We'll send it over here to the analyze screen. All right, so we're going to buy the 56.70 and we're going to sell the 56.60. I like to make these 10 points wide put diagonals. And we'll take a look here. Now, this is kind of an unusual looking trade. Let me make sure everything is correct here, because that looks a little bit odd to me. It is odd because I should have been down at 55, right? Or at 56.38. I didn't go down to 55.70 like I should have. And this is the beauty of this analysis software. You can look and see what you got before you put it on. I can't tell you how many trades that's helped me a lot with, because you see little mistakes anybody can make like that. And when you're looking at all these strikes, just picking the wrong numbers off like that. But when you look at your graph, you go, wait a minute, that's not right. And you know to go back and look at it. So it's very handy. But if we look at this now, what have we got for range here? Well, our lower break even is 54.80. And our upper break even is 57.69. So nearly a 300 point range, right? If we had made it to 90 or 80, we'd be there. We're almost to 80. So even with it structured how it is, you have nearly a 300 point range. Now, I want this really to be at or a little above zero. You can have maybe a little bite below, but the center here where they connect, I like to be at or above zero. We don't have much room to play with here. If we wanted, let's say you wanted a little more downside protection, we can check it out, see if we can go down 10. Look at that. We can go down 10, and now your range is 54.70 to 57.70. That's indeed 300 point range. Now, you could do that or not. If you're more worried about the upside, then I'd probably leave this side alone and just leave it here. And you could make the upside up further. Maybe take every one of these strikes up 10 points. This makes it really easy to manage and do your trades using analysis software like this. So now we're still above zero. Our range is 54.80 to 57.80, 300 points. There you go. So you could kind of tweak this in whatever direction. Now, this is a minor tweak, right? You could actually, even if you had no opinion, you could have done either one of the trades I just showed you because they both give you that wide range. You may even be able to get a little further, but I think it might be pressing a bit. But, you know, in this market, I don't mind having 300, I think is good. Because this thing really, before I'd even think about, hey, I need to do something, maybe repair it, we're probably going to have to be up in the 57.60s, at least 57.50, most likely in the 60s or 70s. And all the way down here, we're going to have to be below 5,500 to even be concerned about some sort of a adjustment or something needing to be done. Now, you can see this trade here is if we got in at the current prices here, it's a Sunday, but showing you what the mid prices would be. So if you got in at 590, let's just say $600, and then you paid $1,600. So this is a $2,200 trade. So what you'd want to do is hopefully get around $220 profit, 10%. You can go for a little more to cover your fees if you like, or you could say, hey, I'd take 220. That's 10% overall, even with fees. What do you make it? 8, 9%. So with that, what I would do is I just start watching the P&L open. And whenever I see that P&L open is, of course, during the day, if you have on spreads in the SPX, you know, this bounces all over as the bid and ask on these trades move. You got two different spreads. We're trying to get filled at the mid price. Things are moving all over. But once I consistently see that the P&L open is staying above that 220 mark, 230, and you're seeing that go on maybe 10, 15 minutes, it's just been pretty consistently above your profit area. Then what I do is go down here and go, okay, if I get out here at the mid price, I can make that money. Now, what is the mid price now? I'll discover what that is. And then I'll send both of these trades in to send this one, then send this one, or the other way around at the mid price and begin to work my way out. There is no way in most brokerage platforms to put in a 5-leg trade like this to get in or out all at once. So you have to handle these as two separate spreads. So you're looking to get 8 or 10% of the entire thing. So once you see you have that, you try to get out at the mid of both. Now, what will normally happen is whichever one it's closest to, many times will fill first. If it's right in the middle, it could go either way. But let's say it was up here and maybe the call side filled first. What can happen is sometimes you'll have to give in a little on that mid on the opposite side. In this case, the put side. That's why I like to be a little above my price. Maybe if I'm going for 220, I'd like to see it consistently 230, 240, maybe even 250 if you really want that 10%. Because then if I put the orders in and I have a little slippage, you know, maybe the one comes off easy, the other one I have to give in a little, you're still pretty close to that 10% mark. So that's how I like to do these trades. Of course, repairs and adjustments, that's what I teach every day over at aramer.com. Links in the description if you want to join me over there every day. Of course, you'd also learn these in my trade alert service. Oh, and I forgot to mention with that also, there's a Slack channel for us. We talk all day over there. That's where the trades come out through Slack and an email, if that's what you prefer. And you can talk with me during the day about anything. You know, what do I think in here? When do you think you'd do this? That type of thing. And I do like to have on usually one trade at a time, sometimes two. As I said, we've been in the one we're in now for quite a while. I added to it. I made it bigger rather than add a new one last week. I just made the trade we were in larger because it did come up around the middle of the trade. I added to each side of it because we did have that debt ceiling, or not debt ceiling, but the whole continuing resolution issue pending in the market. I knew there was a lot of tension, and I didn't want to have on two different trades, especially two different very wide, maybe combo trades, and have to manage two of them if that really took us haywire. So I thought, well, I'll just add to the trade I'm in. And then if something goes wrong, I only got to adjust one trade. So that's how I like to do it. But usually one or two trades on at a time. Personally, I don't really like to have more than 2 or 3 on at a time. Anyway, I just make them bigger. No matter how much money you're using, you know, once you get good at this, I just make the trades bigger rather than the number of trades more. That's how I like to play it, because whenever things go crazy, and in this market, you know, that can happen, it's much easier to manage fewer trades. You know, I would rather adjust 1 or 2 $50,000 trades than have to adjust 8 trades that total $50,000. You can imagine, you know, and many times in the market, if one trade's going bad, depending on how much diversity you have in it, but let's say you're just doing other stocks or something, many times if one thing's going bad, there's other things are too. You know, the SPX tends to, you know, of course, other things are going along with it. 500 stocks in there. The big techs are in there. So if they have a bad day, or a good day, many times the SPX does. So that's why I like to just have fewer trades. When things go crazy, a lot easier to manage, because if you get flustered and adrenaline gets flowing, that's when you make mistakes. So this is a way to avoid that. But when tomorrow comes, we'll see what happens. will we have still that same low vol, or are we going to open up down again? I really don't know. We could continue with the rally. We could have a pause. We will see. And I think things will probably slow down a little bit right before the Fed announcement as the market just tense and doesn't know, where we're going from here. And the thing is, what I've found, not every time, but most of the time, before the Fed meeting, usually Monday or Tuesday, it seems like it's Tuesday a lot, we'll have a decent down day. I've often thought in my own mind, it's almost like they're trying to scare the Fed, the meeting's Tuesday and Wednesday. Hey, let's have a good down day today to get in the Fed's head and make them think we need help. So we'll see if that happens. It doesn't always. Recently, I remember a time or two ago, it didn't. But I look for us to at least have a decent down day, nothing crazy between now and the Fed meeting itself, the Fed announcement rather, Wednesday afternoon. So let's see what happens. Trade like this, if you understand it makes sense for you, just trade it paper, put it on tomorrow afternoon, maybe late in the session, wherever you are, the last couple, 3 hours of the session, and follow along with it and see how this thing can stand up with large market movements and how fast you can get your profit. So that's a great way to learn also. But I do appreciate you being here. Please hit the like and subscribe button and the notify button. And also check out all those links in my description to be over there with us every day trading with my alert service and all the sessions I have to talk about the market during the week. And of course, all my courses, including the latest one on these combo trades. So have great trades this week, folks. Have a good one in general, and I'll be back with you next week. Bye-bye.